All right, what's going on? In this video, I am going to share with you 3 different ways that banks are going to take a look at your business and how you can set up your business so that you maximize the amount of funding that you get. And if you're looking to get a business vehicle through your business's name without having to personally guarantee it, which means you're not putting your personal credit on the line solely through your company's EIN, I'm going to share with you a little tip that you can use to maximize the amount of funding that you can use to build up your corporate fleet and get more work vehicles. All right, so when most people take a look at business credit, we tend to look at it from the scope or from the landscape of how many accounts do I need to add to my credit profile? Or how many tier accounts? Do I need the U-lines? Do I need the Grangers? Do I need the Quills, right? Especially if you've been doing your research, you know exactly what I'm talking about. Those are vendor accounts. Those are trade accounts. But when a bank, when a financial institution is looking at your business credit profile, they're not just looking at your business credit profile, they're looking at your business as a whole. And so they're really looking at 3 different buckets. They're looking at 3 different pillars if we were to kind of build like a house, or if we were to build, maybe have like some type of building that we have set up. So pillar 1, pillar 2, pillar 3. Let's first focus on pillar 1, which is what most people think business credit is about. And part of it is true, and part of it we're just going to go ahead and break down in this video. The first bucket, or the first pillar that banks are going to look at, is going to be your business's credit. Now, there's 2 parts to your business credit. There's a part where you personally guarantee, which means you are putting your own personal credit on the line as a co-signer. Maybe your business is in its infancy stage, which means it maybe doesn't have a lot of revenue. Maybe it doesn't have a lot of business trade accounts. Maybe it's in a place where it doesn't have any financials like profit and loss statements or tax returns. So in an instance like that, it does make sense to personally guarantee something so that you can at least start getting some of those accounts set up. Now, the other part of the business credit is going to be vendor accounts. These are your office supplies like U-line, Granger, and Quill. This is where you get net 30 accounts, net 15s, net 45s, net 60 accounts that you can use to build up your Paydex score, your Dun & Bradstreet score. Now, the one thing that ends up happening if you focus too much on just vendor accounts is you start to neglect your other 2 scores that come from Experian Business and Equifax Commercial. When you neglect those other 2 business credit bureaus, it's just like as if you were to neglect TransUnion, Experian, and Equifax over on the personal side. So what you want to do when you're building out your business credit profile is you want to have all 3 of those major business credit bureaus built out. So if we're talking about Paydex, you want to have an 80 or higher. If you're talking about an Experian and IntelliScore, you want to try to have an 80 or higher. And if we're talking about an Equifax score, depending on the model that you're looking at, from a 224 to a 580, you want to be well above the 400, maybe 420 range, right? That's on the business credit side. Banks and lending institutions, especially if you're trying to get a vehicle through your business's name, will look at that according to how you built it out, because they'll take a look at all 3 scores, and then they'll see, okay, if you want a financial account, which in the business world, that would be considered vehicle financing, then you have to have some type of financial accounts added over into your business credit profiles. This is why you don't just want to have vendor accounts. You want to have financial accounts. You want to add the NAVs. You want to add, maybe if you have a vehicle that you maybe purchased in the past, but you personally guaranteed, even if you personally guaranteed it, having it report over on your business side and having it under your business's books as an asset is actually going to help you out, which now leads us into our second pillar that banks and lenders typically look at, and it's going to help maximize the amount of funding that you get, is going to be your business's cash flow or your revenue. Now, sometimes you have the credit or your business has the credit. Sometimes it doesn't. We actually were able to get one of our clients $120,000 worth of business funding, all non-PG. And part of the reason for that was because their business already had sustainable cash flow. They were already well above $15,000. Now, this is going to, this is going to vary depending on the type of business that you have, the industry that you're in, and how long you've been in business. But a good rule of thumb is as long as you're over $10,000 or even $15,000 over, or really in the last 90 days on a floating average, then most banks will be able to take a look at that and they will be able to give you some type of funding. Now, obviously, again, it does change depending on the bank or the credit union that you go toward, and it does depend on the purchase or even the type of industry that you're in, but that's a good rule of thumb. Now, if you're well above that threshold, then you're in good shape, because that's going to help you out on the stated income side or on the projected revenue side. Because if, let's say, a bank does ask for, hey, can we see your maybe year-to-date income statements, which is going to be maybe your financial accounts, which in this case would be your bank accounts. You can just simply pull up your business bank account versus having to pull up a profit and loss statement versus having to pull up your tax returns. That's the second bucket that banks are going to look at when trying to pre-approve you for funding. The third bucket that banks are going to look at, or the third tier, as sometimes I like to say to my clients, is going to be collateral. So we have cash flow, we have credit, and we have collateral. Those are the three areas that banks are going to look at. So with collateral, similar to what we just finished talking about in the business credit side, is if you're dealing in real estate, you have some land that maybe you can use a portion of that property, or use maybe the equity that you built out and get some type of secured financing through that asset, whether it be through maybe vehicles that you have or some equipment that you're able to collateralize. That's another form of funding that you're able to get from banks. And even if you didn't want to collateralize that debt, it serves your business in your favor, because now you just don't have, let's say, the credit. You just don't have the cash flow, but you also have the collateral that banks can look at and use that to determine the strength of the business. Now, if you're wondering, wait a minute, Irv, do I need all three of those to actually get access to business credit? The answer to that is going to be no. You're able to interchange them. So I always say, if you have all three, the trifecta, then you're in fantastic shape and your business is in good health. But more often than not, when a business owner is starting out, they're usually going to land in maybe the revenue side, because they're obviously one of the first things that you want to do as a business owner is you want to get cash flow going as fast as possible. And then the second thing that you want to obviously start working on is going to be your business credit. Now, if you don't have your business credit, keep in mind, you can still use your personal credit to leverage it so that you can start building out your business credit profile a lot faster. It's just not needed, especially if you're looking to get vehicles through your business's name. You're able to add the vendor accounts, you're able to add the financial accounts, and then you're able to go into possibly maybe a Bank of America, maybe an Ally, maybe one of these banks, or maybe even a Truist, and you're able to seek funding or even some commercial financing for a business vehicle through those banks and through those credit unions, right? And so those are my thoughts on how we've been able to help clients scale their business funding, simply by knowing what banks are looking at. We teach all of this inside of the Inside Inner Circle, which is our exclusive mentorship, where we show our clients how to access business funding so that they can grow their companies and businesses faster. If that's something you want more information on, you can check out the link down in the description. But overall, if you found value in this content, consider hitting the subscribe button down below and join the official community. Don't forget that anytime I'm not posting on here, we will be posting over on the Insights with Irv show, which is our podcast style channel. So if you like what we have going on over here, you'll love what we have going on over there. Once again, I appreciate you guys checking me out. Till next time, everyone, I will see you in the next video.